Gold has started to find its feet a lot more over the last couple of days. Heightened geopolitical risk at the start of this year, which was both unexpected and quite frankly quite shocking, has elevated gold above $1,600 briefly earlier on this year. However, some of that geopolitical risk has now abated over the course of the last few days, and the fact that there's been no escalation in that time has helped gold start to moderate lower. We are now back in the mid 1500 range, and it seems that gold has found its feet around 1540 to 1560, this tight range between those previously significant levels. But we may not hold here for long. At the time of recording, we're awaiting details of the trade deal which is due to be signed in Washington between the US and China. The leaks that we've had so far have been, to be honest, quite underwhelming. Markets have stabilised over the last couple of days because of the underwhelming nature of the details that we have seen come out to this point. But there are likely to be surprises within that. The question is it going to be positive surprises or negative surprises? Any positive surprises which suggest that this deal is both sustainable but also economically beneficial for both countries and therefore the global economy could help to lift sentiment at a time when stock markets in the US are already at record high levels. Improved sentiment would typically lend itself to a slightly softer gold price because obviously this is typically a safe haven instrument, but in times of positive sentiment that can therefore be negative for the yellow metal. If we see a break of 1540, then 1520 starts to stand out here, and also 1500 below. We have seen quite often gold prices are moving in these $20 clips, and that's why these levels have been previously significant and also become future levels of interest once we start to see levels being broken along the way. If the deal itself underwhelms, we could potentially see a case of buying of markets having bought the rumour and therefore sell the fact. Equity markets, which are currently at record highs, potentially pulling back a little because ultimately everything's priced in, and in fact it's actually a little less significant than maybe markets are expecting. I'm quite sceptical as to whether this may actually be the case, though, because I always feel like the administration is going to keep a card up its sleeve. But if we do see this underwhelm, we do see equity markets pull back, this could be a little bit bullish for gold, which could lift it back above that 1560 level temporarily. But I must say, investors are already now focused on the next thing. The next thing is corporate earnings season. We got off to a cracking start yesterday with JP Morgan and others announcing strong earnings, particularly on the trading side. If we start to see that flow through over the next couple of weeks, that could again lift sentiment, lift stock markets in the US back towards those record levels, and potentially be bearish for sentiment and bearish for gold because it's so much more positive for sentiment. Again, those key levels continue to stand out.